Go beyond market headlines to understand the reasons for the day's movers and shakers. And get your portfolio ready for tomorrow. Beaming live from the CNBC-TV18 Motilal Oswal studio.
Mixed opening is what we're seeing on the 1st of December. Taiwan index is trading with cuts of almost 0.3%.
8.2% in Q2 with a 7.8 in Q1 means that first half the economy has grown at 8%.
Support is a 20-day, which is, lagging behind 25,886.
Our teams are engaging virtually on a regular basis.
So the high that we hit is 26,325. So indeed at the open, for what it's worth, we did make a fresh high. So the latest all-time high, 26,325.
For a company to go public, the regulatory clearances are important. We are waiting for that.
So it does look like RBI allowing a little bit more weakness in the currency here, but we would be surprised if they don't step in at some point soon.
Our expectation is that we should get good traction on miners.
Trying to reason why the Reserve Bank did not support as much as it was expected to support.
The two bills aim to change the composition of indirect tax levies on tobacco products and pan masala.
Extremely topsy-turvy. We saw a bit of green at the start, but then what essentially transpired was that post the rupee weakness that we've seen quite a bit of a sell-off, especially amongst names, amongst companies that have dollar-denominated flow, both in terms of debt as well as incomes.
Well, that is the day so far. Markets, of course, are absolutely unchanged. It almost feels like a repeat of what we saw on Friday, where we went home without very much by way of change. A lot of moving parts. The macro is looking good on one end, but not looking all that great if you look at the price action on the currency. So we'll talk about all of that and more here over the next 60 minutes or so. We are coming to you from the CNBC-TV18 Motilal Oswal studios. I'm Prashant. With me, Rima. Rima, hi. Afternoon.
Hi, particularly the domestic macro, not just the Q2 GDP print, but look at the auto sales numbers that have trickled in. For TVS Motors, the expectation was for a 22% growth. The company's delivered 30%. Ashok Leyland, in fact, the entire CV cycle seems to be picking up because Tata Motors numbers just came up. And I think the top line, the monthly sales went up by 35% for Tata Motors CV. But even Ashok Leyland, total sales 29%, estimate was for a 17% growth. Passenger vehicle numbers are strong from Tata Motors, where total sales have gone up by 26%. So the domestic macro print, not just the Q2 GDP, but the auto sales have been surging, but it's been offset by currency concerns, and that's probably kept investors a bit on the sidelines. So as we speak, it's absolutely flat on the benchmark indices trading sideways. Early in the morning, we hit fresh record highs. 26,325 is the new all-time high on the Nifty. From that level, we've slipped, up close to about 140 points. The Nifty is below 26,200, flat. The midcaps are flat, though the small cap index has a bit of a green going for itself. Small cap index is up close to about 0.4%, and the Nifty Bank too, after hitting that milestone of 60,000, has retraced more than about 300 points. So that too is in the red now.
No, absolutely, and I think it's a very evenly balanced kind of screen. Advanced decline should come up on your screen, and even there, the last I checked, nothing to very little to say between up and down. 1,400 up and about 1,550 stocks, which are lower at this point in time. Just a quick look at the small and mid-cap indices before we go any further. The small cap index is up. It's doing better than at least the large caps. And the mid-cap index as well should come up and gives you a quick sense there. So mid-cap index is unchanged, practically 61,020 or so right now. Well, here's what's coming up in the next 60 minutes or so of trade. So fresh sort of high right of the word go, and then of course for the bulk of the session, nothing at all. It's a fresh record low on the rupee on the other side. So what we've hit 89.80, beg your pardon, which I think is the lowest against the dollar, which happened earlier. We've recovered a little bit from those levels. Broader markets, as I just said, not very much going on. Real estate and pharma are taking on the chin. Autos and metals are doing a little better. Wockhardt, we'll talk about it just a bit. Stocks soared after that approval from the US FDA. So that blockbuster molecule, which the approval was long awaited, So the stock's raced ahead, closed at about 1,500 now. So about a 250 rupee move coming in just in a couple of hours or so. So as I said, more on that. Auto stocks with Sudarshan in a bit. Some detail and fine print. Is the GST-induced momentum continuing? Looking like it is. And of course, we'll get you that, silver play. Silver rushing ahead, and just look at what's happening. Lots of silver ETFs are listed, and they're all up between 4-5%. Well, how should you position yourself in the last hour? That's the question. And Midesh is with us to help us with that. Midesh, good afternoon. Good to have you with us here. Not very much to take away from the screen. What would you do? Good afternoon.
Good afternoon, Prashant. See, I think what is important is that, we had an opening about 26,300 and kind of close below it. So long, people who want to trade for the breakout, I think should still keep their powder dry. Just wait it out, I think, because as you rightly said, it's not fallen much, but it's not given a breakout. So you are in a limbo. So I think, this is the time to just be cautious and just observe the markets. On the stock side, what we have done is that, given the fact that we started higher and have tapered off, we reduced our long positions, but it's not a view which is extremely bearish. So for the time being, I think in an overall scenario, it's still a wait and watch kind of a thing. On the stock side, I have one buy and one sell call, which is basically a trade, which is evenly balanced on the stock side as well. So Policy Bazaar is a stock which I would recommend on the long side, buy here with the stop just below levels of 1834. Look for targets of 1900, and Tata Alexa is breaking below the earlier swing lows, so that's on the negative side. A sell call. Keep a stop at 51.71 for targets of around 5,000 to about 5,010.
Thank you. Let's talk about Wockhardt. That's clearly the stock of the afternoon. Stock holding up with a gain of about 18%. The news here is that there is a positive regulatory development from the US for its antibiotic drug, Xenic. Ekta is now joining in. Ekta, you can see that intraday spurt in the stock once the news came through. Why is it such an important event for Wockhardt? What's come through?
Well, yes, the news with regards to Wockhardt is that the US FDA has accepted Wockhardt's new drug application for their antibiotic Xenic, which is basically used to treat difficult infections in ICUs and hospital settings. Now, this new drug application was originally filed in September of 2025. Now, interestingly, Xenic has also been granted a fast-track designation by the US FDA, which basically means that they're going to prioritize the review. So as of now, they've just accepted the application. It still has to undergo the review process, but they've already put it under fast-track status. However, that might not change the outcome of what we can expect in terms of the review. However, the drug has already been used in India and the US on compassionate basis on critically ill patients. So this is something which, according to analysts, could possibly be an added advantage going forward for Wockhardt when they look at, when the US FDA looks at the review part of it. Now, in terms of what the company has said, that the drug will be manufactured by a third party in Europe. Peak revenues, according to them, will be significant. They could see around 150 crores in terms of revenue from Xenic in India itself. It saved around 51 lives in the past 1.5 years, as per the company. Now, the market size, according to them, in terms of, the antibiotics, the antimicrobial resistance market could be around $9 billion globally. These are earlier conversations, so that is something that we'd probably have to revisit. But they could possibly even consider out-licensing or maybe a partner when it comes to Xenic. Now, what are analysts saying? That the size could be around $1.5 billion globally for this drug. Wockhardt will be a patent holder if in case it eventually does get that approval from the US FDA. They think that it could be around a $500 million product for Wockhardt globally, and there could be an over 90% chance that they could possibly get approval from the US FDA going forward based on what they've seen in terms of the phase 3 data. So positive news for Wockhardt, but we'll really have to see what the review from the US FDA does. But the stock seems to be, factoring in a lot more.
Ekta, so they've accepted the NDA and approval is pending.
Yes. So they've just accepted it. They will review it. And if they're happy with it, if it goes through the US FDA muster, then they will get approval for it. So as of now, they've just accepted the application, which itself is a milestone for an Indian company to get so far.
No, accepted means that they'll taken the application to review. That's it. That's all that means.
Yes. But to reach a level of, an NCE, a new chemical entity, which is a drug which is only produced by Wockhardt and could eventually get patented, the application to be accepted by the US FDA to review is also a positive step. But yes, eventually they will have to go through the US FDA muster to see whether or not they comply by the US FDA standards, whether or not there is any kind of complete response letter. But eventually, if they do pass that muster, then it will be a patented drug that Wockhardt will be selling in the US.
Correct. No, absolutely. But that's a massive move.
I think it's the first time in the history of an Indian pharmaceutical company that an NDA has been accepted for a review.
No, my only thing is that maybe we'll, but as Ekta pointed out, but I think they...
Do you think it's a binary event? Like
no, I'm just saying, no, it's not a binary event. I think this has been well anticipated, but I thought, when I first saw the move, I thought the FDA has approved it. But this is like आपने form ले लिया है, accept कर लिया आपने form, देखेंगे, hopefully they'll get it. But my only thing is that when I saw it first, I thought, well, it's actually gone through. So not to take away anything from I'm just talking about the price action with which...
as Ekta said, I think analysts are saying there is a 95% chance for Wockhardt to receive the approval after the application has been accepted. And they think it will be a $500 million product.
So that is the technicality, which is, does it acceptance mean that...
high probability,
or is it what I'm saying, which is layman's accepting a form to decide? But anyway, it's up, and it's up in a strong way as we speak. Deepan Mehta is with us of Elixir Equities. Deepan, good to have you with us here. Thanks very much. Any thoughts, Wockhardt?
Yeah, I think it's a great day for Indian pharma. And a lot of investors have always been kind of disappointed with Indian companies not able to launch IP products globally. And if Wockhardt is successful, it'll be first out of this country. And 500 million is like a consistent revenue year on year. And it would be a big upside for Wockhardt if it is able to make it a success. So I think congratulations to the company. And certainly, I think, we should be tracking this event and seeing exactly where it lands, and then perhaps look at the stock in that light. But if $500 million to $1 billion the revenue potential, then at these levels also, Wockhardt may appear to be cheap.
Do you own Wockhardt, Deepan?
No, I missed that one because of too much uncertainty around this product. But I'll tell you one more thing. It's not just this one molecule. Wockhardt perhaps has one of the best lineup of molecules which are in advanced stage of getting approval somewhere or the other, or so within India or globally as well. And this is not just a one-off case. I think along with Sun Pharma and Glenmark, Wockhardt, these are the only three companies where there's actually the potential for us to deliver a single molecule out of India for the first time for the global market, which will be totally, I think, IP driven and have its own patent.
Okay. So now, since you've missed the bus on Wockhardt, and there is immense potential, you're saying if it does come through, then even at the current market price, the stocks looks undervalued. So would you bet on it, or would you wait for the news to play out, or would it be too late? How should one go about thinking about investing in Wockhardt?
The option. You buy the stock, and if it doesn't happen, then the maximum loss is limited to whatever 30-40% lower it can go from here. But if actually the molecule does work out for Wockhardt, then who knows, 3x, 4x, 5x, what can actually come out. And then one could lead to another. So I don't know. I think the strategy here has to be unlike that of an option, where you assume that, at some point of time, it may become worthless. But if it does work out for you, then it can give very good returns.
Nigel's also joining in on the show. Nigel, good Finding Alpha show.
Well, excellent. I mean, a lot of good feedback coming in there with regard to Finding Alpha.
What was your big takeaway from?
The big takeaway that Sumangal, who is Sumangal Nevatia, he's been tracking the metal space for more than 15 years, I think. So, I've been here 15 years, so from Macquarie to Kotak. But the big takeaway was that he's quite very, very bullish on aluminium. Aluminium will be in a structural deficit for the next 4 years odd. Between them, he prefers Vedanta, which is surprising because most of the sell side prefers Hindalco to Vedanta. But for what's not worked for Hindalco is that fire that capex that is spiked up as well. That's why he's betting bigger on Vedanta, because all the capital expenditure that they've done, now the fruits will come through. So that's why he likes Vedanta over Hindalco. And on ferrous space, he prefers Jindal Steel and Power, and he's not too optimistic about getting a safeguard duty. That was another takeaway as well. So if it comes, actually, it'll be a positive. And from the recycling theme, he likes Gravita, which is corrected big time, 2,500. I think it's become 1,700, but he likes that. Dipan,
let's actually, Nigel, go across to Sud, who's now. We'll just go across to Dipan in the metal space. Sud is here. Auto sales numbers with what we've got so far. So take it away.
So sales for the month of November so far have been largely better than expectations. One segment we knew that it would do well because Vahan data was indicating a very strong demand. That segment is commercial vehicle. Both the companies, Tata Motors commercial vehicle and Ashok Leyland, have reported numbers much better than expectations. In passenger vehicle, Maruti, Mahindra & Mahindra and Tata Motors passenger vehicle have reported better than expectations, but Hyundai's numbers were largely in line. In two-wheeler space, companies which have disappointed is Eicher Motors, and for Bajaj Auto it was largely in line, and the company which have done much better than expectations was TVS Motors. So I'll start with two-wheeler space. Bajaj Auto total sales have increased by 8%. Our expectation was also 8%, and the reason of drag is domestic sales. Domestic two-wheeler sales have seen a decline, while exports and three-wheeler continue to see a healthy growth. For Eicher, the segment which has not done well is models above 350cc segment, and that's seen a decline of 6%. And also exports growth have moderated this month. It just saw a growth of 6%, while the segment that is models below 350cc continues to see a healthy growth. For TVS Motor, it was an all-round beat. Total sales have increased by 29%. Our expectation was just 22%. All the segments have seen a double-digit growth. Three-wheeler has seen a growth of as much as 150%, and electric vehicle growth was almost 50%. Coming to passenger vehicle segment, Hyundai largely in line, saw a growth of 9%. Our expectation was in the range of 6 to 7%. Maruti, it has seen a healthy growth of 29%. Now, the segment which has done well, unusually, it's the entry-level segment. Two cars, Alto, Espresso. The growth this month in November was 66%. SUV continues to see a healthy growth. There also the growth was 22%. For Mahindra & Mahindra, continues to see a healthy growth, and it's being led by SUV segment. That saw a growth of 22%. Total growth was 19%. Tractor, as expected, has done very well. Both Mahindra & Mahindra tractor segment and Escorts Kubota have reported numbers better than expectations. In commercial vehicle segment, Ashok Leyland has seen a growth of 29%. Our expectation was 17%. Tata Motors commercial vehicle also saw healthy growth. There also our expectation was 16%. So overall, the numbers so far, the companies have reported sales numbers are looking largely better than expectations.
Okay, all right. Let's get in. Dipan, what do you like from the space? You know, we've got some auto sales numbers that have come in. What's your preference out there? And also auto ancillaries, actually, you know, some of them are bracing for very, very good showing in Q3. So if you could give us your topics.
Nigel, I think TVS Motors, clearly again disclosure, we and our clients are invested in it, and great set of numbers and consistently outperforming the industry and able to maintain and increase its market share in a highly competitive sector as well. So that really is the pick when it comes to two-wheelers. Although I think Eicher Motors also the momentum is good. I think that longer term play, both these companies should do pretty well. I would prefer them over Hero MotoCorp and Bajaj Auto. And within the four-wheeler space, of course, M&M certainly, I think, takes the crown over there. The entire kind of outlook, the kind of model rollout is very impressive. And they are ahead of the curve when it comes to EVs. That is what I like the best. And valuations are still reasonable. So I would say that this is the sector to be overweight in. And specifically, I think auto ancillary also should do well. So if you want to play on a specific OEM, then go for the auto ancillary. I think the Uno Minda Corp, both of these companies are our favorites. And there's another small company called SJS Enterprises, which is into graphics for four-wheelers and two-wheelers. It's a small cap company. It's a company in which we and our clients are invested in. That's also a very interesting play on the entire auto industry, be it four-wheeler, two-wheeler, also on the appliances, and specifically on greater premiumization and focus on design for the auto industry.
Thank you very much for that. But the auto ancillary of the month is Ricoh Auto. It's up 3.5% today, but this month it's seen a 48% rally. Pull up Rico Autos monthly up move. I think most of it has come through recently, but there you have it. Month to date, 47%, and that is the entire year's gains too. Thank you, Dipan, for joining in. Get into a break. On the other side, we'll invite Mihir Vora, Chief Investment Officer at Trust Mutual Fund, on the other side. Stay tuned. Welcome back. By the way, GST collections have gone up by a muted 0.7% on a year-on-year basis and come in at 1.7 lakh crore. This appears to be slightly disappointing. The November gross GST collections at 1.7 lakh crore, up just about 0.7%. So at odds, I mean, the post-festive demand perhaps is not showing up in the GST collections, though the auto numbers continue to look very good. But by the way, the big development today was Rupee touching a fresh all-time low of 89.79 against the dollar, which made the Indian currency 34 paise cheaper over its compared to its overnight close. Now, dealers blame lesser supply of dollars from the RBI for the rupee fall. Lata joins in with what she's picking up from the market. Lata.
Well, the dealers at least tell us they don't have any fresh reasons. Probably it's yet again foreign portfolio investors pulling out, selling equities and taking dollars out of the country. It is possible that there is a slightly higher demand because the very strong GDP number indicates hints that probably there is no rate cut from the Reserve Bank. So further incentive to buy Indian stocks may not be there, and that's maybe making people go, or people are just taking position that maybe the Reserve Bank will not cut, and therefore, people will pull out later. So, speculation is, people are just trying to outguess one another. Nobody is speaking of a very large FPI demand. It seems to be the usual demand, but it seems like the Reserve Bank has let go. Usually the Reserve Bank keeps supplying dollars, but once in a way it lets go, and there are various theories on why it is allowing, the rupee closed at 89.45 on Friday. It let go the 89.50 mark, which was a surprise. Everyone thought 50 was a line in the sand. Maybe because, once the rupee becomes cheaper, then the current account deficit will automatically correct, because every imported item, the dollar is being multiplied by 90 instead of 85. So you will not import. That would be a natural market-determined way of checking trade deficit. There is another explanation that, when people are moving out, why should they move out multiplying it by 89? Let them get only 88 when they pull the dollar out. So the Reserve Bank is allowing the rupee to fall. There are all these kinds of explanations that are trying to reason why the Reserve Bank did not support as much as it was expected to support, why it did not support up to 89.50. The other explanation was also, again, more a running commentary on the market. There is something called a fixing. That is, month-ago contracts get rolled over. There is a particular time by which it gets rolled over. The explanation is that the Reserve Bank did not roll over all its sell contracts, and that also caught some people, on the wrong side, and they had to cover in a hurry. All told, the Reserve Bank is always of the view that we don't cut, we don't have a level of the rupee, we only control volatility. So you shouldn't be surprised with these one-off moves, which is more to trap speculators.
Lata, thank you very much for that. And of course, we've got a close watch on this one. Mihir Vora is with us for now, Chief Investment Officer, Trust Mutual Fund. Mihir, good to have you with us here. Thanks for joining us. This rupee dynamic, right? I mean, at the margin does influence equity direction as well. What is your sense? I mean, one way to look at it is, if you're a foreign investor, you're buying it closer to 90 is better than buying it closer to 88. But then, I mean, there is no certainty. This is it. But that's the minority and silver lining view. How would you look at this dynamic, Mihir?
Hi, Prashant. Always a pleasure. Thanks for having me. See, I think this rupee dynamic is what exactly Lata mentioned. The RBI will control volatility, but not the level of the rupee. Second thing is, we do have FII selling on a continuous basis in the equities market. So that's obviously not that great for the rupee. And third is, I think it's also the back of the mind of the RBI and the government, that we are facing stiff tariffs from the US, of course, while we hope that the trade deal will happen sooner rather than later with the US. But the exporters also probably do need some support to counter some of the tariff impact. So I think all these combinations put together, global uncertainty, FII outflows, and the tariff uncertainty, is probably making the RBI to kind of let the rupee go, find its natural level, so that we have some buffer in terms of the exporters. Having said that, the government is doing its bit in terms of supporting the exporters, the MSMEs, etc. So I think it's a whole package that we are trying to give so that there is no major disruption as far as the exporters are concerned.
Mihir, you had the annual trust day on Friday, and what was did this come up in any way? Was this significant? There is some talk of liquidity being a little tight at the margin, while growth momentum is there because of GST cuts, it also means revenue collection has been hampered. You look at the tax collections of the government, April to October, it is growth of 4.5% compared to some 11% which the government had budgeted. So it's kind of both ways, right? And of course, there is a lot of supply because of welfare spending, etc. So just your thoughts. And I guess banks and financials, NBFCs will be the most impacted if liquidity remains tight. Go on.
Absolutely. So I think liquidity will not be an issue. The RBI has been doing, ad hoc or even unannounced almost OMO kind of operations in the market. So there is no way that liquidity will be allowed to remain tighter than required because we are still in the growth mindset. Let's face it, the situation or the mindset since April, May this year, or even from January, the budget where they cut tax rates for the first time for the middle class. The mindset is that we will do whatever is required to make sure growth doesn't falter. Because this currency, etc., is something that's a competitive devaluation, I would say, happening all over the world. So you have a situation where the mindset is that of money printing, and that's the reason why you see precious metals, etc., rally so hard in the last few months, because there is a money printing mindset. So I don't think beyond a point we need to worry too much about the currency. And that's the reason why, in spite of a good GDP growth print that we just saw on Friday, the consensus still seems to be on the side of 50-50, I would say, on the side of a rate cut. Normally, if you have 8% GDP growth, there's no need to cut rates. But I think people do understand that there is a deflator impact. GDP growth is not a given. There is still handholding required for business. So liquidity will continue to be provided as and when required. So I don't think we need to worry about that, because globally also central banks and governments are on the fiscal, I would say, profligacy part. We are not profligate. We are just supporting to the extent required, but globally they are still on a fiscal and monetary profligacy part. So I think we should be fine as far as the currency as well as liquidity support the markets are concerned. I think the big debate is whether, because of a lack of interest in FIIs, both on equities and fixed income side, those expected benefits of inclusion in the bond index probably got pushed, by a few months. But that's fine. I think we do have a healthy bond market in India. We do have the growth triggers required. So I think the consensus was in general, towards the side of growth rather than too much worrying about currency and inflation.
Mihir, hi. Afternoon. Exactly a year back, you all had launched the Trust Mutual Fund Small Cap when there was a lot of caution and skepticism surrounding small caps. In the index, your fund has done very well. The AUM has ballooned to more than 1,000 crore and it's delivered a return of 9-10%, outperforming the benchmark, which has been pretty much flat or maybe slightly lower. So tell us now, going ahead, about 1-2 stocks in the small cap universe that you like and why, with the appropriate disclosure.
Absolutely. So I'm sorry, I won't be able to comment on specific stocks, but the whole rationale of launching the small cap fund, even before we launched, say, a mid cap fund, the first was, of course, Flexi, and then the second fund we launched 1 year ago was the small cap fund. The whole rationale was that the canvas of the small cap universe, is very large. You have the top 100 stocks which are large cap. You have the next 150 stocks which are mid cap. So the universe of large and mid is pretty much restricted to 250 stocks. But then beyond that, there is almost another 800 to 900 stocks with a market cap of more than 2,000 crores. And that's where, in our view, a lot of the emerging segments, business models, the challengers or the untapped market potential companies come into the picture. And we found that when we are digging into the higher growth segments and sub-segments, for example, auto OEM is a normal growth segment, but auto ancillaries are a higher growth segment. Specialty chemicals, for example, is a higher growth segment. The cap goods part, where a lot of industrial capacity on the mid and large and the MSME side is happening. Machinery manufacturers, the electronic plays, etc. Those are all in the small cap segment. Some of the the new age companies also are starting as small or mid caps and then going into small caps. So we believe that to find growth at reasonable valuations is much easier. And of course, you need to have a bandwidth of analysts, etc., which we do have. But once you put that bandwidth, once you kick the tires and meet companies, then there is enough number of choices out there, even in volatile markets, to make a portfolio of 50, 60 stocks, which is what we have done. So, we've really been focused on growth because our whole philosophy is growth at reasonable valuations. And the skepticism was that, growth is overpriced. But we always believe that out of 800-900 stocks, to build a portfolio should not be that difficult if we really get down to it. And that's what we've delivered. So even in volatile times when the benchmark was down for the last 12 months, as you mentioned, our fund has delivered good positive performance. And I can talk about some of the niche themes that we've held in the portfolio if you want.
Can you tell us about some of the niche themes that you continue to bet on?
Certainly. So our biggest, overweight typically tends to be in the physical investment space. So industrials is one big overweight that we hold in most of our portfolios, including the small cap fund. And there we have plays in electronic manufacturing, in capital goods, in machinery manufacturing. So, for example, we have companies which supply to the Apple, manufacturing ecospace in India. Then we have companies which are very fine precision machining in plastics, etc., which supply not only to local but global pharmaceutical companies, etc. So the point is that the good part about small caps is that they really don't need to depend on the GDP growth of India in the next 1 or 2 quarters. These companies have business models which are in segments which really are organically growing so fast, emerging so fast, that it doesn't matter whether Indian GDP next quarter is going to be 6% or 8%. These companies are kind of insulated from that, both even if they are exporters or if they are catering to the domestic market. For example, if you talk about auto ancillaries, so you might see auto OEM, whether it's two-wheelers or four-wheelers, growing at mediocre rates in some quarters. But the point is that within a vehicle, there is so much additional value engineering happening. There is so many additional features, whether it's in safety features or electronic features or the ADA anti-locking braking system, etc. More use of electronics, more use of this fancy decoratives and the LED lamps, etc. all around. So the value per vehicle is dramatically increasing, and that's where some of our niche companies in the auto end space cater to. So again, as I said, it doesn't matter if the car market grows at 5%. The value addition per car is so much, and these companies are specialized so well that they can easily go at 20-30%, even if the car market or two-wheeler market grows at a mediocre level. So this is the kind of approach that we are taking to stock picking. In renewables, we have some exposure. In CDMO, we have a significant exposure. And if you really get down to it, most of the options in these segments happen to be in the mid and small cap segment.
Okay, all right. We'll leave it there. A good conversation as always, Mihir. Thanks very much for joining us with that color on what you own in the portfolio and what you are doing. We'll take a quick commercial break here. As always, we'll get you a quick sense of what's happening in dealing rooms with Nimesh. He's got a couple of stocks on his list as well. And, of course, some trading ideas on the other side. There's 14 minutes, I beg your pardon, 24 minutes to go for market closing. Stay tuned. Two things have happened from the last time. Welcome back from the last time we looked at the index. The intraday should come up. We sold off sharply. The market from being absolutely flat sold off about 60, 70 points. And I'm not sure if that kind of coincided with the release of the GST numbers. I think almost sort of simultaneously, the GST numbers which have come through are showing any, I mean, they're basically down month on month. Of course, GST rates have been cut. So in terms of actual value collection, there is a hit. But I think these numbers are also the lowest since February of 2024. So there's a 0.7% growth in November. And the numbers come at about 1,70,276 crore rupees. So this is the number that we're talking about. Year on year is up a little bit. Month on month, of course, is down. And this is the lowest number since February of 2024. So the market sold off, and I think it's already come up a little bit, but we're still down about 30 odd points. Okay, 20 points, 26,187. Okay, let's talk about D Street chatter. Nimesh is joining us now with what he's picking up about the mood out there. Nimesh, take it away.
Hi, Prashant. So sharply off days high. I guess a large part of this fall today seems to be on the back of large FI selling. So I understand there's going to be a large basket selling at a leading FI desk. Some bit of it is MOC as well. So probably today's FI data could be quite interesting to watch out for. But again, despite a very strong GDP data, to have such a reaction is a bit surprising as well. Again, the trend of broader market underperformance continues. So midcaps are under pressure as well. As I said, there is basket selling, and part of it has to do with a bit of selling in the PSUs as well. So select PSU banks as well as the OMC stocks is where I understand there is selling pressure from the larger FIs in today's market. I guess all eyes will be on the RBI policy later this week. Again, most of the economists are of the view that there is a potential 25 basis point rate cut, but the probability has come down by some of these analysts. So that policy will be quite interesting. Also because if there is no rate cut, you will see a bit of a bounce back in the bank names vis-a-vis the NBFC. So that's something from a positioning point of view to watch out for. But today's fall, I guess, has to do to some extent on the back of FI selling.
Okay, all right. Nimesh, thanks very much for that. In terms of specific stocks, what should you list?
Well, so I'll start with a couple of stocks where I'm expecting large block deals. Adani Green as well as Lakshmi Dental. Well, both stocks have been in a narrow range of late, but I understand there will be large blocks in both those names. In Adani Green, I understand the strategic investor will be a seller. And in Lakshmi Dental, a large FD holder, which is a private equity investor, they are likely to sell a large chunk in days to come. So these are the two names where expect large block deals. The second name is eMudra. Stock has been flat in today's market, but I understand the selling pressure from a large P is largely over. There was a clean out trade, there was a large block. So looks like today was a large block, a last block from that particular seller in eMudra. The third name is Kotak Mahindra Bank. Weak market that stands out today on the higher side. I understand the selling pressure is largely over, and also there is a small MOC buy as well at a leading FI desk today in Kotak Mahindra Bank. And the last is Concor. After a long time, some bit of buying seems to be back in this name as well. So expect high delivery volumes, and there is buying as well, is what I understand at an FI desk in Concor as well.
Thank you. Interesting list as always. And for now, let's move across to Nigel. He's at the F&O desk with the latest trends.
Well, that's right. In today's trading session, the Nifty seems to be in a bit of a range as we speak. And, we've seen a bit of a bounce from the lows of the day as well. Let's pull up the Nifty and the India VIX. Well, the India VIX has actually been cooled off even when we went to the low point of the day. And the India VIX being well behaved, that helps you out in terms of a bullish view. Moving to the Nifty, well, it's facing clearly resistance at around the 26,300, 26,350 mark. Because last week we went to around that 26,310. Today's high as well as ballpark 26,325 odd. And from there, we've done a bit of a U-turn. So in the near term, that becomes a bit of a congestion zone. Moving to the PCR, a few sessions ago, it had danced away to around 1.5. And from then on, we started this cooling off / consolidation phase on the Nifty. It's come down to around 0.85, which is good news. You want the PCR to cool down, and you don't want to see a very sharp correction on the Nifty. That's precisely what's taking place because the Nifty is going through a time-wise correction, which is good. But the call writers are gaining. If you look at the 26,300 call, the premium out there, at the start of today, it was close to around 60 rupees. It's come down to around 23 rupees. Also, if you look at the put side, even though the Nifty is trading in the red, the 26,150 put, the premium has come down from around 53 rupees to around 47 rupees. So writers, they are at play today. And, if you're a writer, you're making money in today's trading session. Moving to individual stocks, NMDC, the stock saw a bit of a correction. That one has come in for some fresh buying actually in today's trading session. The stock is holding mildly higher, and you have the open interest as well that surged up. Ashok Leyland, that's a stock for the second week running actually is seeing a good amount of open interest build up, and it's continuing with a good amount of strength. And Sammaan Capital, that's the one that's seen a big correction. But, off late, you're seeing a bit of a short covering bounce that's playing out there because it's refusing to break that range of around 145 to around 150 odd. So that explains why that one as well, a bit of a short covering bounce on that one. But the options data suggests the writers, they are, making hay in the last few trading sessions as the Nifty continues to trade in this range of 26,000 to 26,350. Back to you.
Thank you. Indeed, very sideways. Auto ancillaries have started moving up, perhaps in reaction to the strong auto sales numbers. ZF Commercial, 12.5%. Autoline, 7.5%. Balu Forge, a small company, that's showing traction. NRB Bearings, momentum seen on that. Large volumes, close to about 13 lakh shares traded. Stock is up 4.5%. Most of these stocks have now moved to the day's high. So with auto ancillaries also seeing some positive traction. Mitesh Thakkar is now back with us. Mitesh, any more stocks that you've noticed where you would trade?
So I think, very clearly the market is slightly negative, but as you were highlighting, it's the autos and TVS Motor, I think, leads the pack. Very strong candlestick pattern today, a bullish candlestick pattern near the day's high. So BTSC can be attempted, though slightly higher. Keep a stop below 3649. Look for a target of roughly around 3690, 3695 for. And on the negative side, I think, we'll go with the Ember. That's a SCVT with a stop at 7091 for targets of 7040.
Okay, TVS, Amber, some of these stocks on Mitesh's radar for trade. Sudeep Bandyopadhyay is now joining in for the last leg on the show. Sudeep, afternoon, Wockhardt, stock of the day. What have you made of the news flow surrounding Zenec?
Well, I think it's a very good development from Indian pharma point of view. This is the first time a company's independent research molecule product rather has been accepted for review by the US FDA, and this is a landmark day for Indian pharma. But as far as stock is concerned, I'm of the opinion that it's a very, very risky proposition to kind of bet on this and take fresh position on Wockhardt, at this point in time. However, if you are willing to take a risk, I think it's worthwhile. Look, what can happen? Assuming this doesn't go through and US FDA rejects, the price may correct by 20, 30, 40%. So if you are willing to take that risk, you probably should go and buy, because if it's successful, then probably the valuation will go up two times, three times. It's anybody's guess, because this will be the first patented drug by an Indian company. So I think it's in that realm of speculation and realm of uncertainty. It's going to be a binary event. So let's wait and watch the scenario. And I told you, if you're an aggressive investor, consider that 30-40% downside and go and buy.
Absolutely. 20%. Limit up now. So 1482 is where we are at this point in time. 25 points lower is what you have. One of the stocks which Nimesh mentioned with regards to blocks coming is, one was, of course, Adani Green. The other is Lakshmi Dental, which Nimesh mentioned. I was just looking at the price and the damage on this one. It came to the market in January of this year, and it opened at 540 rupees. That was January 31st, January 2000, not 31st, but basically January 25. From 540, it's now down to 270, as we close this year out. And if you just look at the list of institutional investors, etc., it's got pretty much everyone. And I think in a way, this kind of talks about the broader market pain that we've been discussing. I mean, Nimesh put out that data with many of these names as part of his editor's roundtable link. And there's more as you go down the list. Any thoughts on, on this one or what we're seeing out there in many of these mid-cap, small caps, Sudeep?
Well, I think, overall healthcare, we have been positive. This particular stock, unfortunately, has taken a severe beating. But by and large, the entire healthcare space has done well. Yes, there are some pain in the mid-cap space and small cap space. And, you have to be very, very selective. That's what I've been maintaining on the mid and small cap universe. In large cap, when you buy something, you may not get that extraordinary return overnight, but you are assured of a certain quality and certain progression. But mid cap and small cap, you have to be careful. I won't paint everybody in the same brush, but there is traction in a lot of segments and a lot of sectors. We were talking about auto ancillaries some time back, and look at what has happened in auto ancillary. There has been a kind of uniform upward movement across product categories. Look at, by and large, the hotel and hospitality space.
Sudeep, we'll just hold that thought on auto ancillaries. For now, let's go across to Parikshit. He's in conversation with the Union Minister, Jyotiraditya Scindia.
We're joined by Union Minister Jyotiraditya Scindia, who's handling crucial portfolios relating to telecommunications, to communications, India Post and Department of Northeast Region as well. Minister Scindia, thank you very much for joining us.
Always a pleasure, Parikshit.
This is a time when the government is brainstorming with the industry ahead of the union budget. There is also a discussion on within the government on the next generation reforms after GST. Could you give us your thinking on what needs to be done now for the telecom sector in order to make it easier for companies to get into India, make investments for the future? What can they expect in the weeks and months to come?
So first of all, this is already a deregulated sector. Secondly, my process that we undertake in both in the Department of Telecom and on the Department of Posts is an iterative process. We have set up 6 advisory groups in the telecom sector, covering the whole value chain within telecom, from equipment manufacturing to service providers across the board. And those 6 advisory groups meet with me on a regular basis. On a regular basis, issues are brought up, issues are facilitated, resolved, and we move on to the next items on the agenda. So for us, within the DOT, as well as Department of Posts, it's an ongoing process. For example, in the Department of Posts, we're coming out with 6 new products across mails and parcels. We're developing SLAs, service level agreements, in terms of responsiveness, delivery, across those 6 products. So it's an iterative process. So we always are, if you will, if I can give you an analogy, on a moving treadmill, static.
Welcome back. You're tuned in to Closing Bell. Well, Sudeep Bandyopadhyay is still with us. Sudeep, what's your view on these recently listed names? Lenskart, Bazooka up, that's up close to around 5%. Obviously, there's a large amount of stock that is actually still, in not the trading in the trading window. It's still curtailed. And also Physics Wala, the last time I checked, I think it's up 10%. Any of these names you like, or you believe that it's too frothy?
Well, Lenskart is definitely too frothy. I was pessimistic actually on Lenskart and have been recommending to stay away. Of course, I must admit that the numbers which they came up with were pretty decent. The quarterly numbers which they came up with was pretty decent. And that, I think, excited the market. But I still believe that once the lock-in period gets over for the large chunk of the shares, there will be significant selling in the market and price will probably settle at a much lower level. There's no fundamentally problem with the company. It's a good business, good company. They're doing good job. The only problem is the valuation. That's about it. I would say to an extent the same thing for Physics Wala. Edutech sector was not getting any money from anywhere for the last 1.5 years post the fiasco on Byju's. But I think Physics Wala set a different mood for the market, and everybody is watching what happens to Physics Wala. Everything is good except valuation.
Okay, just about a minute and a half to close, and it's going to be an absolutely flat closing, slightly lower on the Nifty and the sensex, and this is after opening at record levels in the morning. The Nifty ending below 26,200 after scaling a peak of 26,325. The Nifty banked to top 60,000 mark for the first time ever, but ends about 85 points in the red, significantly off from the morning highs. The record low on the rupee of about 89.7879 against the dollar was a big dampener, and that offset the good news that we got from the Q2 GDP print and the auto sales numbers. If you look at the big gainers today, it's all autos on top. So Tata Motors, passenger vehicles, Maruti Suzuki, Eicher Motors, all gaining ground. But even outside of that, on the mid-cap end of screen, TVS Motors with a 30% increase in the auto sales, Hyundai also big movers. BEL higher in trade. Kotak Mahindra Bank had a positive tick. IT names like HCL Tech, Tech Mahindra saw some buying. On the way down, Max Healthcare, Interglobe Aviation, Bajaj Finance, Sun Pharma, Adani Enterprises were some of the stock losers.
Well, that's right, Rima. In terms of metal stocks, you had Hindustan Zinc that was up and about in today's trading session. The silver, HDFC silver ETF, that was up. Nippon India silver ETF, that as well was up close to around 6%. Take Solutions, not a stock we talk about very often, but that was up close to around 5%. Aegis Vopak, that's another stock that was up close to around 5%. And Lenskart as well goes home with a gain of close to around 5%. From the day of listing low at around 360 rupees, the stock is up close to around 20% from there. So massive move is what we're seeing on that one. Need to take into account that there's a limited fleet